Welcome back, it's Seth here. If you want to be a millionaire, there are 5 numbers that you should focus on to ensure that you become a millionaire in no time. These numbers are not what you're thinking. They're not complex like calculus, which I still don't understand to this day. In my opinion, these are numbers that everyone can understand as these are based around your personal finances. Once you get a hang of these numbers, you'll be very much on track to becoming a lot wealthier than you are right now. Before I dive deeper into what these numbers are, please remember to hit the like button down below, and if you haven't subscribed, please subscribe to help grow our channel. Now that you hit the like button, let's dive in. So the first number that we should focus on is your savings. Savings, in my opinion, is the first block of building wealth. If you're not able to save, it is literally impossible for you to build wealth. Currently, the average savings rate in Canada is sitting at 5.7%, which decreased from 6%. And in the US, the average savings rate is at 4.5%, which has decreased from 5%. At these savings rate, the chance of you becoming a millionaire are significantly low. For most individuals, to become a millionaire, you're probably going to look towards inheritance. So our goal is that we're saving anywhere from 10 to 20% of each of our paycheck that we receive. But I would say 20% is ideal to helping you grow your wealth faster, but 10% can also get us there. I would follow a few steps when starting to save. First thing you want to do is ensure that you have an emergency fund saved of anywhere from 3 to 6 months of your monthly expenses. The purpose of the emergency fund is that you have enough savings in case you do lose your job, and you can afford all your expenses for the next 6 months until you get another stream of income. And once you have your emergency fund, I would start moving your savings into good investments such as ETFs to help grow your wealth much faster. However, you can reduce the percentage of savings going towards your investment if you are planning to buy something in the short term. So let's say that you want to purchase a car. What I would do is put 10% towards your investments and the other 10% towards purchasing this car. My rule of thumb is that I don't invest in the market if I'm looking to purchase something within 5 years, as the market fluctuates and you could be down money in that short term. So it's better that you move that money into a high interest savings account so that it doesn't fluctuate with the market and you can purchase whatever your goal is to buy, in this case, the car. And once you've made that purchase, you want to make sure that you increase your investments back to 20% to help you grow your wealth much faster. By saving 20% of your paycheck, you're putting yourself on track to becoming significantly wealthy. The second number that you need to focus on is fixed expenses. Your fixed expenses play a huge part in determining your monthly and daily expenses, and they usually take up majority of the income that you receive. Fixed expenses on average take up 50% to anywhere to 60% of your income. According to Bureau of Labor Statistics, most individuals tend to spend money on housing, transportation, personal insurance, pension, and food. The thing is that when most individuals look towards reducing their expenses, they seem to cut out that $5 to $7 coffee or some subscriptions such as Hulu or Peacock. And yes, they do make a difference at the end of the day, but you're only saving a few $100s at the end of the year. If you want to be a millionaire, you need bigger reductions in your expenses to help you get there faster. So if you're spending a lot of money on housing, maybe take a look if you can rent out a room or your basement on Airbnb. This way, it will help to reduce your housing cost as the income that you receive from Airbnb can be used to pay down your house or other expenses related to your home. And if you're renting, the rental market has dropped significantly. So maybe you can renegotiate a new deal with your landlord, and that way you're able to get better, cheaper rent, and your landlord doesn't have to worry about vacancies. When it comes to transportation, there are a few options that you have to help you reduce your expenses. You can look at trading down your car so that you can get a less expensive car and has lower monthly costs. You can transfer your lease to someone else, or you can refinance your current car loan at a lower interest rate when the interest rates do drop. Also, if you are looking to buy a car, my opinion is do your research and buy a reliable car, because that will save you a lot of money in the long run and a lot of headache. With insurance, make sure that you're not overpaying on your premiums. Make sure that you call the competitors and see whoever can give you a better deal. You'd be surprised that some competitors are willing to give you a discount to just steal business from others. If you're able to reduce the larger expenses, this will make a huge difference. Even if you're able to save 5% or 10% from your fixed expenses, you can take the difference and invest this amount, helping you to get wealthier much faster. Now, the third number that you want to focus on is discretionary spending. Your discretionary income is basically money that is left over after your fixed expenses and your savings. This will make up 30% of your income, as 50% is already allocated to our fixed expenses and 20% is our savings. Discretionary income or discretionary spending is basically income that you want to spend on things that you really want. The truth is, the reason why we all want to have better finances is to have financial freedom to do whatever we want and buy whatever we feel like. But we all have to get to that point first. So I think it's important that your discretionary income is going to places that actually give you joy and value. Before you actually make that purchase, you want to see that if that item or experience actually brings you value and happiness. If it doesn't, then you're pretty much wasting your money. You want to spend money where it brings you maximum satisfaction. So let's say you're spending most of your money on clothing and accessories, but really you value experiences such as concerts and traveling more. So what we need to do is reduce the amount of money you're spending on clothing and accessories, as it's not giving you that level of satisfaction, and spend more money on concerts and traveling, because that will give you more satisfaction at the end of the day. When it comes to discretionary income, the more you spend it wisely, the more satisfaction you'll get from each single dollar. So now this leads me on to the fourth number that we need to focus on, and that is income. Even though I really do believe that we have more control over our expenses than our income, I still do think that we have some level of control on the amount of money that we can make. And I'll illustrate that even increasing your income by a little bit can really help you to become wealthier much faster. Let's say currently an individual who's 25 years old is investing $500 a month at the average return of 10% each year and is planning to retire at the age of 65. The $500 investment will yield a portfolio of $2.8 million. But now let's say you're able to increase your income a little bit, and now you can invest $750 per month, so $250 more. At the average return of 10% each year, now your investment portfolio will grow to $4.1 million. And let's say that you're able to increase your income a little bit more, and now you're investing $1,000 per month at a return of 10% a year. Now your portfolio is going to be worth around $5.5 million. By investing twice as much, your portfolio will yield you $2.8 million more. And I don't know about you, but I don't think anyone hates a few extra $1 million. Also, by investing twice as much, you can become a millionaire in 24 years, versus if you're only investing $500 a month, you'll become a millionaire in 30 years. So if you're wondering how can you increase your income, well, there's plenty of ways that one can achieve this. The first one I think anyone can do is to find a job that's willing to pay you more for the work that you are currently doing. If you've been working for at least 2 years and you've learned the ins and outs of a job, most competitors are willing to pay you a lot more money to come work for them. I've seen competitors pay 10, 20, 30% more to attract good talent to their company. Another way you can increase your income is by starting a side hustle. If you have a talent or you produce digital products, you can sell these products on a website like Etsy. Or if you're super creative and you like creating content, you can definitely post your content on TikTok, YouTube, and once you have a mass following, you can monetize your content for extra money. Another way you can increase your cash flow is by investments that generate monthly income. Another way you can increase your income is by buying investments that provide some sort of cash flow, such as dividends from stocks or monthly rental income from rental properties. In the time that we're living in today, as long as you're creative and willing to work hard, you can generate income from almost anything. Just be prepared to put some time and elbow grease to get things going. And the last number that you want to keep track of is your net worth. Just like you track everything of your health, such as your blood work, your weight, and your fitness goals, it is equally as important to track your financial health as well. Knowing your net worth will give you a clear idea of where you fall and can provide you with a clear picture on what goals you need to make to ensure to get a higher net worth. If you're not sure how to calculate your net worth, it's a pretty straightforward formula where you take all your assets and minus your liabilities, and this should give you your net worth. So for an example, if you own a home that's $600,000 and you have $100,000 in cash and investments, those are your assets. And now if you have a $200,000 mortgage and a $20,000 car loan, those would be your liabilities. Now if you take those assets, subtract those liabilities, this will give you a net worth of $490,000. I personally have made a simple Excel sheet where I put in all my assets and liabilities, and I keep track of my net worth. And I try to update my net worth on a quarterly basis, as it seems to fluctuate quite a bit with the stock market. I know some individuals that update their net worth every single month, and some only do it once a year. So it's really based on your preference. As long as you are tracking all the numbers we've talked about in this video today and investing on a consistent basis, you will definitely see your net worth increase over time, setting you up for a successful retirement. I hope you guys took away the importance of measuring these 5 numbers and how consistently measuring these will help you become a millionaire or even a multi-millionaire. So if you guys enjoyed this video, please stay tuned for future videos. And until next time, remember to keep investing.